Hey guys, welcome to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx, and we're here to answer a question. The fundamentals dead. Now, this was something I thought the markets are quite quiet now. It may be time to just zoom out a little bit, talk about what might be coming next, but it's quite clear from what we're seeing so far that the market is very reflexive, very responsive to all the headlines that we're seeing right now, particularly regarding the tariffs and their progression from the point at which they were put into action in terms of the reciprocals most recently to the point where they were paused. We've seen lots of volatility. So I wanted to highlight today, while we might be seeing a lot of uncertainty ourselves as traders, as investors, it doesn't really help even being a policymaker in this current environment. And we saw that overnight with Fed Chair Jerome Powell at his speech in Chicago at an economic forum, basically highlighting some pretty key and relatable elements opposing their stance on how they feel about the economy right now. He had this to say: rising tariffs under the new administration threatens to disrupt the Fed's inflation control efforts, potentially creating tension between its employment and price stability mandates. The Federal Reserve signals a cautious approach to monetary policy, adjusting as it navigates tariff-driven inflation risks and the slowing US economy. So when we pull it all together, it's basically as clear as mud for them as it is for us. And that's what I wanted to highlight today, that there is as much demand from investors as there is from policymakers when it does come to understanding what is the current administration's stance towards economic policy and diplomacy internationally moving forward. Clarity and consistency, it's just not there. So while there is no solid forecast, even from the policymakers, on what to expect next, obviously we have seen headline metrics like inflation be a very hot and heavy topic ever since the rise in 2022. I wanted to go over some of these backdrops, some of these underlying themes and data points that are going to drive decisions in the future, but may not be getting the time of day right now. I want to start with inflation itself. Now, when we talk inflation, we're referring to the change in the cost of goods and services. Here specifically, we're looking at the change of inflation metrics in China, Europe, and the United States. And while we have seen that there has obviously been a period of elevated figures, which had been aligned very much with the bear market that we saw during 2022, 2023, we have been on a downtrend. And this is a driving force when it comes to policymakers into understanding what phase of the business or growth cycle are we in. And lowering inflation rates, that opens up the conversations and doors towards providing stimulus or turning off quantitative tightening measures. Now, secondly, we can also look at global liquidity. And I really recommend everyone go and check out our Swyftx Learn article on potential fundamental catalysts for 2025, where we look into some of the impacts that M2 or quantitative tightening has had on crypto markets in the past. It's a quick read and you'll definitely benefit from it. But essentially what we're seeing when we look at these leading metrics is they're all pointing to the upside. These are the metrics that when they have gone higher, we have seen crypto markets within a relative period start to follow as well. And this again just highlights that no matter how good the fundamentals are looking right now, we're definitely in a headline risk environment where everyone is looking for some consistency, some clarity, and that's just not something that we're seeing right now. So when the time does come, we are seeing these leading metrics heading in the right direction. And this again all just comes back to the very simple fact that we're just living in very uncertain times. And we can look at a economic policy uncertainty index, which is a survey in the US, and we can see that it is at a level we haven't seen since the COVID crisis in 2020. And this is just another point to reinforce the fact that these are, again, very fragile, uncertain times. And until we see any clarity or direction, it's a very hard game to know how long we could be potentially range bound or moving lower or just stagnating to the side in our markets. While we have seen tariffs obviously drive a lot of this headline media, the one thing we haven't seen, but we're probably approaching, is the idea of deals. Now, obviously there's an exchange that the Trump administration is looking to make with a lot of these countries. And what we have not yet seen priced into the market is what does it look like when these deals start to come to fruition. Now, we also don't know if that's going to be days, weeks, months, years. It's a big unknown that we still haven't seen, and that's what I think will be something to pay attention to moving forward as we see this ongoing and uncertainty get to a point and the deals flowing. And that's what I'm pegging to be one of the next key catalysts from where we are today, knowing that we're in a headline risk environment. But that's it from me here at Swyftx. Thank you so much. We'll be back again next week. Cheers.